Hey guys, what's up? Alec back with the daily stock market, and look at that, pretty red day in the market. We have Square Block down around 10% on the day, one of the biggest losers. Also, if you look at this heat map here, you can see what stocks have been hit pretty hard today. Not many stocks finishing green. A big red day in the markets. Today, we're going to be talking about some Metaverse stocks. So in this video, we're going to go over the best Metaverse stocks, the most hype Metaverse stocks. Now, a lot of information has came out and said that Metaverse hype is dying down and the real use case for the Metaverse won't be applied for 24 months from now, at least 2 years or more into the future. So keep that in mind. A lot of these stocks are going to be long-term stocks. The metaverse isn't something that's just going to explode overnight. It's going to take some time for the technology to even catch up. But some of these companies that are going to be dominant in the metaverse could end up being some of the biggest companies in the future once the metaverse becomes a daily part of everyone's lives. Also, Facebook, we're going to be doing a quick update on Facebook, because if you type in FB anymore, the ticker symbol is officially changed on Facebook. It's now META, which is Meta, and it's down 6% on the day to $185 per share. So we're going to be diving into Facebook or Meta to see if they're a good purchase at a 52-week low. So make sure you hit that subscribe button and you stay throughout this entire video so you don't miss any stock market up. So you don't miss any of the updates on these stocks. Okay, so the first one up, let's talk about Meta Platforms, down 45% on the year, and they're pretty much at an all-time low. And it looks like they're headed to new lows of around $180 per share or under $180 per share. So I think that's a great place to be buying Meta for long term, is right around $180 per share. That's basically the same price they were in 2018, which is about 4 years ago at this point. You'd be getting Meta or Facebook at the same price it was in 2018. And if you pull up Meta's income statement, you can see that from 2018, they've been growing net income consistently, now at $39 billion in net income. All right, and total revenue is now at $117 billion. And if you go to 2018, revenue was only at $55 billion. Guidance is still looking good on Meta, and we're still seeing growth on all of its platforms, especially in WhatsApp and Instagram. Okay, Facebook still has a huge amount of daily active users. And if you look at their balance sheet, it's very attractive too, because they have very low liabilities with very high assets. We have only a 24% ratio. So we can see that not only Meta has some of the best growth over the past few years from 2018, but it also has one of the best balance sheets in the entire stock market for the size of the company that Meta is. Okay, and if we see what analysts have to say about Meta Platforms, you can see that they have around a 51% upside in the next 12 months to around $278 per share. And you can see where some of these guys are coming from. A lot of them are 5-star analysts, and you can see a lot of them have price targets above $250 per share for Meta in the next 12 months. Overall, I'm continuing to buy Meta Platforms for long term. I think they're a great stock to hold on to for years to come. I think they'll continue to grow. The best way to go about it is dollar cost averaging. Also, now that the stock is not Facebook, and its Meta Platforms, it could be disassociated with Facebook, because a lot of people have a bad stigma towards Facebook, and that could hurt the share price a little bit. So rebranding to Meta Platforms could be a good idea, because it disassociates Meta Platforms with Facebook. You know, because before, people would just see the stock and think Facebook, when really it's a lot more than just Facebook is only one pillar of their business. And Meta Platforms is now having many pillars of their business. Even with the Oculus, the VR headsets, they sold the most VR headsets in the world last year, and they'll probably continue to be a dominant player in the VR headsets. So for a metaverse stock, I think that this is a great one to dollar cost average into for long term. Next up, we have Square or Block, and they're down 10% on the day. And if we scroll out to the past 3 months, we can see them down 26% and down 64% in the past year. They're headed to that all-time low again, around $71 per share. And I shouldn't say all-time low, but recent low. In the last 3 to 4 years, it hasn't been much lower than around $60 per share. So once we get under $70 per share, Square will be a lot interesting, and it's definitely a stock that could have around 100% gain, if not more. And the analysts have around an 88% upside in the next 12 months to $144 per share. You can see there's 5 and 4-star analysts coming in with around $120 price targets, $150 price targets. But on average, it's around $144 per share that these analysts have Square in the next 12 months. For a summary on Block, we see with the horrific action in the stock market, the company is still growing sharply and is moving more toward being profitable in a sustainable manner. The recent earnings missed estimates slightly. A great deal with Apple has become a catalyst. Bitcoin prices are in the toilet, but otherwise the company is delivering. Earnings are positive and valuation is improving. Block links up with Apple. Just this week, we learned that Block announced that it's working with Apple to enable tap to pay on iPhone. This is Apple's contactless payment feature, and it will be now available within Square's point of sales on the Sale app. This is huge for small businesses and consumers alike, and it reduces the need for separate transaction entering credit card information, and is even more convenient than tapping a card or inserting a chip. This will speed up transactions, which will allow businesses to process more transactions per hour versus traditional methods. It is a win. Right now, the technology is in beta, and small businesses can sign up for the test of technology with its early access program. Block's Q1 headline earnings results fall short. While the company has made a great deal to be integrated with Apple, the company did fall short on the estimates in its recent report quarter. Keep in mind that revenues had recently taken off since cryptocurrency, such as Bitcoin buying and selling, was introduced to the platform a few quarters ago, but the stock has become linked to a large degree to the price of Bitcoin. This is both bad and good. Right now, it's really bad because Bitcoin has been crushed, and its just announced quarter net revenue was $3.9 billion, down 22% year over year. This is a miss versus consensus, but a lot of this horrible action was driven by the trash action in Bitcoin. Excluding Bitcoin's transaction, total net revenue in Q1 was $2.2 billion, up 40% year over year. As you can see, this remains very impressive growth, even if it's not as explosive as it has been in the past, still growing nicely. However, with the Bitcoin, you can see how important it has been for the growth of the company. So as you can see, if you want exposure to cryptocurrency and you're not involved with cryptocurrency too heavily yet, Block could be a good stock to own if you want that cryptocurrency. If you're overexposed to cryptocurrency and you have too much cryptocurrency and you want to get more into stocks, then Block could probably be one to steer away from. All right. Now, another note is Block's transaction revenue and GPV gross profit are key metrics to watch. So these are things to watch moving forward as you own the company. Revenue from transactions was $1.2 billion, rising 28% year over year, while gross profits were $500 million, up 19% from a year ago quarter. This is strong, contributing to the solid headline numbers, even if they miss. The big problem is that these increases are not as large as in the past, though the market effectively priced in this slow growth after shaving the stock 70+% down. If you're an investor here, then the volumes are a key metric to watch. Volumes are better than expected, surging from a year ago. Block processed 43 billion, up 31% year over year. Transaction based gross profits as percentage of GPV was 1.1%, down 12 basis from a year ago, but still remains strong. Block's Cash App as well as Bitcoin tradings are huge revenue sources, but Bitcoin exposure has been painful this year, and we already talked about how it's linked to Bitcoin and cryptocurrency the stock's price action is. Cash App has been a winner for Block. Cash App generated $2.4 billion of revenue while delivering $624 million in gross profits. Block was a large part of this. It's worth noting that the price of Bitcoin was a bit weak in Q1. With the volatility in pricing helps with trading revenue. The company has a lot of Bitcoin on its balance sheet. The company is highly invested in Bitcoin. So with Bitcoin falling, shares have been punished. Okay. And for a final update, we'll see that a lot of these updates are mostly positive, though increasing in operational expenses are, of course, a concern. As we look ahead to a year, we expect 0.5 to $2 EPS, which puts the stock at still pricey, but much more reasonable 68 times forward EPS at the midpoint this expectation. But on a price to sales metric, a good measure of growth tech valuation, we are much more reasonable, 2.3 times. We think the stock can come down a bit more, but it is a buy. So dollar cost averaging is probably going to be the best way to go. Final thoughts on Block stock here. The company continues to innovate and grow revenues. We hate to see operation expenses grow so much, but earnings remain positive. The valuation is stretched, but we think that it can improve if crypto prices improve while operationally the company continues to execute. All things considered, with the moves the company is making, we think you should be a buyer here. And with that being said, there's huge risks and reward with Block. If everything works out, they can be like the Visa slash MasterCard of the metaverse, which would be a huge business model to have. They're also down around 70%. So buying under $70 or $75, dollar cost averaging, buying very slowly and averaging yourself in between $50 and $75 could probably be the best way to go, but you really have to have a long-term mindset, 2 to 3 years with something like Block. And the last one we'll dive into today is going to be Coinbase, down to $63 per share. Okay, they're down 7.8% today on Thursday. And if we scroll out to 3 months, we can see that they're down 68% from highs just in the last 3 months. And if we look at a 1-year chart but focus on the last 8 months or so, we can see they're down around 82% in just a span of 8 months. We see a slow start to recover up until May 31st, but now we're seeing that downward momentum from Coinbase again. So by far, if you want to invest in Coinbase, the best thing to do is dollar cost average in over probably the next 6 months or even 12 months, dollar cost average in however much you want to put into Coinbase, because they're in free fall mode right now. They just IPO'd in 2021 April, and they don't have a bottom. They're at an all-time low. Right now, their bottom's around $53 per share. So if you could get in under $55 per share or even under $60 per share, your dollar cost average in, that could be very beneficial. However, right now, there's no bottom. Like I said, it's in free fall mode. So just be careful, because this could be a $20 stock for all we know. However, we're going to make some points and arguments why Coinbase is probably actually going to be closer to $150 per share to $200 per share in the future. So needless to say, there is a lot of risks. This is a speculative play. A lot of the metaverse is speculative right now, and a lot of the metaverse is also tied to cryptocurrency. So if Bitcoin goes to 60K or 100,000, then you're going to see Coinbase go to new all-time highs with the stock. So if you want to get a little bit of exposure to, if you want to get more exposure to cryptocurrency, Coinbase and a lot of these metaverse stocks that we talked about could be a good idea to start there if you don't have any cryptocurrency currently. So if we look at what analysts have to say, they have an average of $150 per share in the next 12 months with 138% upside in the next 12 months on Coinbase. You can see where some of these analysts are coming from. We actually have a 5-star analyst coming from Bank of America that just reiterated his prediction 7 days ago. And he's saying around $80 per share in the next 12 months, which would still be a nice return on your investment. All right, and if we dive into a summary of Coinbase, stock fell by 72% in 2022 to year to date, given the company's weaker than expected first quarter performance and the cryptocurrency market crash. A short-term rebound for Coinbase stock is unlikely, but a share price recovery from Coin is achievable as long as the company is successful with its revenue diversification plans in time to come. I view Coinbase shares as a hold after evaluating both the company's short-term and long-term outlook. Elevator pitch: I rate Coinbase shares as a hold. My prior article for Coinbase discussed Coinbase shift to NFTs or non-fungible tokens. I also emphasized in that article that with cryptocurrency prices on the decline, it becomes even more important for Coinbase to diversify its revenue base. Since the start of the year and the publication of my earlier article, Coinbase shares have performed badly, with the weakness in cryptocurrency market being a key contributing factor. Coinbase deserves a hold investment rating in my view, although I think Coin's shares will eventually rebound as it diversifies its revenue base into NFTs. It won't happen anytime soon. Therefore, Coin is a hold rather than a buy. Is Coinbase a buy, hold, sell? It's a hold. Coinbase shares aren't expensive considering that cash accounts for around 40% of the market cap. Wow. So the cash on their balance sheet makes up 40% of the market cap. So if somebody was to buy Coinbase out, like if Goldman Sachs or Chase, whatever JPM buys Coinbase stock and they pay the price of the market cap, they would get a 40% discount because as soon as they buy that company or acquire that company, they also acquire everything on the balance sheet, which would be 40% of the market valuation in cash, which is like $4 billion in cash they would acquire along with Coinbase. So it's not expensive because they have a lot of assets, almost making up their entire market cap. However, Coin's near-term prospects aren't favorable, and it will take a while for Coinbase to ramp up its NFT productions to be less dependent on the cryptocurrency market. The takeaway, Coinbase stock remains under pressure along with cryptocurrencies. The short-term volatility in stock prices, however, offer long-term oriented investors an opportunity to double down on Coinbase stock. There are a lot of moving parts, but Coinbase seems well positioned to grow in the long run, which should convert into higher stock prices. So Coinbase is definitely well positioned in their niche. Okay, it's not like there's only going to be one winner like Coinbase or FTX or crypto.com. There's only going to be one of them. There can definitely be many of them. Think about credit cards, for example. You have MasterCard, Visa, Amex, Discover. So you have four big ones. If not, I'm sure there's a few more. So same thing with these different brokerages like Coinbase, FTX, crypto.com, Voyager. Some are going to be bigger than others, but Coinbase seems well positioned that it should be around top 3. And I don't think it's going to go anywhere where as long as it doesn't mess up and it does diversify those revenue sources, revenue streams. I do think Coinbase could be a home run stock with gaining 100% gains for your portfolio, but it could take longer than expected. It could take 24 months or even longer than that. But I'm playing the long game with Coinbase. There's no point in playing the short-term game. And I'm also dollar cost averaging into Coinbase like we discussed earlier. So I hope you guys really enjoyed that video. I've been getting a lot of requests for my close friends list. And yes, I am going to be shutting down signups soon. The stock market is going to be picking up soon. So make sure you message me on Instagram if you want to become a part of the family and get access. We also took that put out on Neo and we were up around 36% on the day, made around $55. I'm going to hold it until tomorrow and probably sell Friday morning or Friday afternoon, and I'm looking for around another 30% gain on that option. So if you want to join the close friends list and see when I post my options every single week, which ones I'm taking out, how much I'm taking out, most of them are under $200. I try to take out cheap options because I know a lot of you guys don't have that risk tolerance or just want cheaper options to play around with in general. I do have a few more spots to fill before I shut down signup, so message me on Instagram if you want to get serious about option trading. I also just hit 500 posts on the daily stock market on my Instagram, so that's a huge milestone for me. 500 more posts are coming in the future, so make sure you subscribe, turn on post notifications, be a part of the journey. We're still getting our account to $100,000. I took some money out of the stock market, and if you're part of my close friends list, you saw that I took around 40%, 25 to 40% of my portfolio out of the stock market, and we're going to be getting back in here soon. So we'll have that $100,000 portfolio goal. So make sure you hit that follow along so we could hit $100,000 in our accounts together. Thank you guys for all the love and continued support on these videos. It means the world. Smash the thumbs up. Share this video with a friend if you think they'll find it helpful. Subscribe with post notifications on so you don't miss any future uploads. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.